Hello everybody. For today's video we are going to look again at the Nikkei 225 which made a significant breakout last week. So I will update you the view on the Nikkei, which remains quite bullish. We will also make an update on the US dollar, which is consolidating its recent advance as expected. Then I will show you the Euro Stoxx 50 chart, which remains globally unclear but bouncing back. So in the short term we are seeing a technical bounce in line with the oversold signals I noticed 2 weeks ago. And we will see that there is a major sector rotation taking place on this market. So first I will update on the Nikkei 225. So as you can see, I recently discussed the possibility of an upside breakout on the Japanese stock market index above a key resistance at 23,000. So as you can see, the breakout was massive. We don't even had a short-term pullback after the breakout. My target was minimum a move back to January highs, so almost done this morning. And I think the index will go higher, possibly to 2450. And this is a potential ABC with wave C equal wave A. So I still see the possibility of further rise on the Nikkei. Dollar index, last week I was expecting continuation of the correction on the dollar index. I mentioned two levels. The first one was Fibonacci support at 93.65, and the next one was another Fibonacci support and also the 200-day moving average, so at 92.62. The first level is almost reached, so bears may traders who are short dollar may book some profits around this significant technical support, but I think the US dollar will probably go lower within coming weeks, and the next level and potential downside target is 92.60. If we update the chart of the Euro Stoxx, so this is a chart I showed you 2 weeks ago. 2 weeks ago, the Euro Stoxx 50 was oversold for the first time since February. So this is a trading model, contrarian trading model I use. I spotted this signal and highlighted at the time that we were likely to see a technical bounce similar to the one observed in March. So this technical bounce is on the way, and the next week or two will be quite important to validate this scenario of a technical bounce ahead of renewed weakness, which is still possible even though markets bounced back sharply this week. So from a long-term point of view, I would say that there is no obvious breakout at this stage. All we are seeing is an invalidation of the short-term breakdown we saw in September. So this is the good news. But longer term, it's not yet possible to turn outright bullish on this market. So at this stage, what I'm seeing is just a technical reaction within a neutral trading range and not yet a clear breakout. Anyway, what we are seeing with this technical bounce of the market is quite important on the sector-wise. This is the matrix I show you every Monday, so ranking stock sectors in Europe. So as you can see, we have a significant sector rotation on the way. So this was the matrix at the start of the week. So we were already starting to see profit taking, underperformance of real interest rate sensitive sectors due to, of course, the rise of rising bond yields, both in Europe and in the US. Utilities, real estate, but also some profit takings on defensive with underperformance this week on healthcare, further decline of the relative chart of personal household goods, retail, and also technology. On the other hand, what we are seeing is a massive rating of underperforming sectors. So most of this sector, except telecom, were obviously the strongest sectors of the week. So we are seeing a massive mean reversal move with investors during the rally buying the laggards and selling the leaders, at least defensives and interest-sensitive sectors. So the driver of this recovery are obviously banks, autos. So these are charts I will show you right now. So first, if we start with the auto sector, a very, very weak sector until last week. And this is the relative chart versus Euro Stoxx 50. So we can see that the sector recovered pretty strongly relative to the market over the last week or two. A significant technical bounce as well in absolute terms. I think in the short term, this index can go to an important resistance zone at 575, 580. Then is likely to start a correction afterwards. So this is what is more likely within coming weeks. So at this stage, what we are seeing is an end of the underperformance which started in January. So this is the good news on auto. I think this underperformance is coming to an end. What I don't know yet is how long will it take to build a bottom, because I mean we could see a kind of pattern like this with the auto sector ending its underperformance, but we will probably have to wait a bit longer before we see this sector becoming a real leader of the market. Same comments on banks. So as you can see, a significant technical bounce of the banking sector. I mean, the revival is less significant than on autos, but it is significant. As we can see during the last low of the bank index, there was a minor bullish divergence forming on the relative chart. So I think this technical bounce of the bank sector is going to continue in the short term, and same pattern than on stocks, autos. Longer term, I think we are likely to see a test, so pullback after the initial rise of this sector. So short term technical bounce, but too early to consider auto and bank as leading sectors. On the other hand, what we are seeing is weakness on former leading sectors like technology. The tech sector made 3 consecutive lower highs and is even testing important support level this week and breaking down. So we are likely to see further underperformance of the tech sector in the short term, possibly a deeper setback to an important support at 426. So in the short term, the momentum of the technology sector is obviously deteriorating. Have a nice trading day and a good weekend.